Hello, everyone. Welcome back to the Prospero.ai stock market live streams. I see Steven Rodriguez in the chat. Thanks for the chats even before the stream was going. Thank you. My weekend was great. I hope yours was too, Steven Rodriguez, and everybody who's going to be tuning into the stream today. We have a lot to go over today, starting with the Moody's downgrade on the USA that if you're a newsletter subscriber, you saw was a main focus in our newsletter over the weekend that came out last night. The markets opened up red today, as was mentioned, was probably likely from the downgrade, but they are fighting back, kind of trending higher throughout the day so far. We'll see if that can continue. The closest one to going green today is the Dow Jones, down just 0.1%. And the most red on the day right now is the Russell, down just over 1%. Let's look at SPY and QQQ net option sentiment as we start the stream, so we can check back in later on and see if there's been any big switches as we've been streaming here by the end. Let me just say thank you to everybody who's tuning in early. Please like the video if you're watching on X or YouTube. I really appreciate it. It helps our stream grow, and if you enjoy the content, definitely hit that like button. Thank you, thank you. All right, I have SPY pulled up, and we have a net options sentiment of 12 right now, so pretty low. It was as high as 50 last week, so now back down into very bearish levels, almost in single digits, so we'll have to keep our eye on that, see if it's able to recover at all throughout the stream today. And then we have the QQQ at 43, so still holding on just above the bull level of 40. So we'll watch both of those numbers throughout the stream. After we talk about the market, the Moody's downgrade, and what we're seeing in the Prospero signals, we're going to get into the update that NVIDIA just made. They are announcing the NV Link, which is going to allow them to work with other companies outside of NVIDIA CPUs. So it broadens their market capacity, and also will probably be beneficial for other AI companies now that they can be compatible with NVIDIA. Then we're going to get into Michael Burry. So you guys probably know him, the famous Big Short investor. He has a very interesting portfolio construction right now. If you haven't seen it, he is 100% all in on a single stock, which I will keep you guys pondering about it until later on when we cover the story. But it's pretty crazy. His entire portfolio, 100% all in. That shows you, I guess, how confident he is on this name. So we'll fill you in later on which name that is. Then we have the 23andMe data, which we've covered on the stream as it was announced that they were going bankrupt, and we were wondering about what was going to happen to the data. Now we have our answer. So it's going to be bought by Regeneron. So what does that mean for the 23andMe customers? Regeneron, is it a good buy for them? We'll go through that. Then this morning, when I was trying to find some good topics for us to discuss on the stream, I came across a story about Bed Bath & Beyond, I believe, and it got me to look through all of those stocks. I don't know if you guys remember, like a couple years ago, it seemed like a lot of like early 2000s companies were going crazy in their stock price for some reason, and I came across one of them that has been up 2,000% in 5 years now, which is completely insane. Again, like the Michael Burry story, you're going to have to wait until later on to find out, but it's shocking the fact that this stock has 20x in 5 years. Topher, good guess. Jonathan, makes sense why NVIDIA upside just went from 52 to 88, and net option sentiment being in the 90s. Yes, reacting well. Let me see, actually, is NVIDIA green on this slightly red day? I think when we talk about that topic, I want to bring up some of the quantum stocks that were very popular at the end of last year as well, because I see a lot of them are going on runs of their own. NVIDIA did pop into the green briefly, but it is back red now, only down 0.5%. So being bought up, it was down in the pre-market as much as 3.5%. So coming back now, we'll see if it goes green throughout the day. Yeah, but that story probably affected the readings in Prospero, Jonathan. Then we have a story that I wanted to bring up on Friday, but we never got to it. Oklo, they were up 20% after they reported, but they did delay their projected timeline for their SMRs. Let's take a look at them today. They were actually green as well, now back in the red. But they delayed their timeline to late 2027 or early 2028. And I believe this is the third delay that they've now made and when they expect to release their first SMR. So are investors going to be willing to hold? So now it's like 2.5 or I guess a little over 2 years until they expect. And will this timeline actually be true now, or are we expecting another delay there? It seems like the excitement for the AI and AI adjacent sectors in the market kind of coming back now that the market's got some stronger footing. So we're going over some of those areas today. And then the last story I have to go over is comments from President Trump about Walmart and China, what he expects to happen with the tariffs, and how the Walmart, the business, and China, the country, to handle the situation that is currently unfolding. And that will be it. And then we'll switch over to the model portfolio update at the very end of the stream. So stick around all the way into the model portfolio update when we will go live through and make live switches. So usually you can only see those if you pay for the newsletters, but on the stream at the end, you get to see it for free. So that's why you should stick around till the end. Let me take a look across the market here today and see if there's any big moves to announce or just highlight as we're just waiting for George to join us here in just a moment. All right, let's look at the Mag 7 first of all. Apple, Amazon, Meta, Tesla, Google, all red. We just looked at NVIDIA was also red. Microsoft is currently the only one in the green, so some relative strength there from Microsoft. It's actually getting very close to hitting all-time highs. I think just maybe $10 away, so within about 1%. Let's look at Microsoft in Prospero, see if their signals are looking good with that strength we're seeing in the stock move today. I see it is in our short-term bull list right now. 85 upside, 81 net option sentiment, 94 technical, 80 profitability, 19 downside. So yeah, looking quite strong there. If you guys look at the our picks list in Prospero, since we stream, I look at it quite often, and I've noticed that it looks kind of more similar to how it typically looked throughout the times I've been looking at Prospero, where a lot of the big tech is on there now. Hey George, welcome to the stream. And it was really weird earlier this year when the market was so bearish. There was a lot of companies you'd never seen before on that list. So it looks like we're back into a more normal environment for sure. Okay, look at that. Net option sentiment for SPY, still low. When we looked at it at the very beginning of the stream, George, it was at 12. Now it's at 22, so a little bit better there.
All right, it's moving.
Yeah, a volatile day. Obviously, we got the news story that we're going to go over that's probably shifting things a lot. Bitcoin is now actually up 1% on the day. The Dow Jones is slightly green, and Russell, QQQ, SPY are red. So, George, what we want to start off with today is obviously this Moody's debt downgrade. So the USA went from, so I don't really have any idea what, it went from capital A, lowercase a 1 to capital A, 2 lowercase a's. What does this mean for the markets? Is it impactful? Is it more of a headline, or does it actually mean anything to how the USA can borrow money or how businesses can borrow money? Take us through it.
I mean, it matters directionally, right? If you're still in that kind of rating, they're rating you as an extremely high probability, even on the downgrade of paying back your loan. So, I mean, debt is it's all about perception, right? The perception around America's ability to pay their debts is much more important than the rating. I would say the rating is an important marker and a reminder. But I mean, you see right now, there's a budget being passed, and I think I think the tax cut is estimated to add 36 trillion to the debt. And I think that's, some Republicans are saying that they, to pay for that, they want a bigger cut to Medicaid. But it really is both, it really is both political parties. It has been for a while. If there's one pattern that seems to be cross party, it's that whoever is in office appears to spend more money, or increase the deficit. I don't think it's both, but spend more money, definitely. The budget seems to go up. And nobody seems all that interested in balancing it. And we're getting to a point, I think, where it seems like people are giving up. So yeah, I do think that we are like, I don't think it's imminent, but directionally, I do think our credit's going to get worse and worse, and we're going to leave you know kind of a worse and worse situation for further generations, until we start to demand that the government, cuts down on spending in areas that they, it doesn't seem like either party really wants to, like, things like, you know, one of the things in particular, I mean, I'm not saying that we should, cut anything for vets or anything like that. But for example, when they analyzed the Pentagon's budget, they couldn't find $1 trillion in the Pentagon's budget. And I think until we're willing to at least know where that money is going, steps like that, I don't think we can even hope to have a balanced budget. And I think we deserve that, right? I think we deserve to know where our tax dollars are going. And I think more and more we are kind of treated like we don't deserve that. And that's what I'd hope us as voters would start to demand change on.
So I saw some people wondering why Moody's released this like right after the market closed on a Friday. And obviously we highlighted how net option sentiment for SPY was reacting negatively at the end of the day on Friday, kind of highlighting that something might be dropping. Um, if you had to like say yes or no, do you think there's any coordination in like the release of this story, people positioning bearishly, and or is it just like a coincidence that this happened?
There are leaks everywhere, right? There's like these rating agencies, the regulators, the people on Wall Street. They're all going to the same, functions, social circles, So so these leaks happen, right? Somebody knows, someone gets wind of it. It's like, I don't even think that's particularly, like, there's some bad insider information, but I don't even think that's like particularly nefarious. I think it's probably like someone, that knows someone at the rating agency that, something slips, or, I don't really know the makeup of it, but we talk about this all the time. The relationships between funds and regulators and rating agencies, it's very incestuous. And if you want, like, The Big Short is a good place to look at, like, how that functions sometimes. But the bottom line is, um it's it's pretty the information flows pretty well. So there's, no matter what the event is, you're never surprised. And this is like, this happened, before Trump, before Biden. Like, this has been a long trend in terms of people kind of getting wind of this kind of stuff. And if anything, I think in kind of the information age we're in, it disseminates more than it used to. I think these things could stay more tighter knit before. Um, but but yeah, I mean, I think there really, and you kind of have to use deductive reasoning on it. There really was no other reason on Friday that people would start hedging more aggressively. You look at the market, we're in a nice little, we're in a nice little bull run. The large caps are having a nice week. If you kind of use deductive reasoning, like, that's the biggest reason that you would see a pullback in enthusiasm, more people hedging, that kind of thing. So yeah, in terms of the timing of it, uh, I don't think there's anything in particular to that. Like, it's probably just whenever they had it. I mean, it's not rare they do S&P ads on a Friday. I think, sometimes it's simple. Like, it's the same thing. Another rating agency. I think sometimes it's as simple as uh, it's less demands on your job. Like, we always say, is it laziness, or is it malfeasance, or whatever? And like, I do feel like if you release major news on a Friday and just kind of leave for the weekend. Probably by the time Monday happens, you have to like talk about it directly, less than you would have if you released it on, say, like a Monday morning, and you're probably like talking about it all day. But if you're talking about actual impact, like it's going to impact the way it does. And if anything, I feel like you kind of see these things kind of fester over the weekend, and then people pile in to sell sometimes. And we didn't really see it piling in, but the argument that maybe doing it on a Friday would have less impact on the market, I don't think much holds much water, because a lot of the times you see things kind of fester over the weekend, have people worried, and already basically they hear more other people talk about it being worried, and they're all ready to like short the market, dump their stocks by the time things open. And we didn't see that. But yeah, I don't think there's much to it. Like I do think that there's definitely something to it being easy for your job if you do it on a Friday afternoon, but I don't think it has much. I don't think you can say that it's less impact on the market.
And it shows the importance of the Prospero signals, because in an era before them, you would have just got the story and then been like blindsided by a headline, versus now you kind of anticipated maybe there's some bearishness coming by how the net option sentiment was forecasting. So that's why it's so helpful.
Yeah, yeah, definitely. I hope some people de-risk their portfolio a little bit.
hmm So I want to go over Nvidia now, because they made a headline this morning, and we were talking about it before you were in here, and he said it makes sense why their upside went from 52 to 88 in Prospero. So the headline was that they announced some new technology. Jensen Huang was quoted as saying the NVLink Fusion is so that you can build semi-custom AI infrastructure, not just some semi-custom AI chips. So as of right now, NVIDIA has a lockdown on the chip market, but it seems like they want to expand and become more of a whole provider for the infrastructure of AI and computing. And it's also going to allow them to work with CPUs that they don't make. So broadens the market for them. Maybe it's good also for other chip makers now that they're compatible with some NVIDIA products. But how do you feel about this NVIDIA update for the stock?
Yeah, I mean, some of the function of like upside breakout, I would guess without looking at the numbers, is that they opened up some new long-term options on Nvidia. Unless the only other thing, if net option sentiment went down, it could be I'm checking it. It's more likely the first thing. No, net option sentiment didn't go down and upside breakout went up. So yeah, I mean that when you see behavior like that, it almost always means like, yes, there are some there's more people just like changing their bets around, betting more long term. But I think I'd probably guess there was some new originations that took place there. But yeah, I mean, I think if you look at this story, it's definitely easy to change I'm thinking about maybe adding NVIDIA, especially with that change, because there was like a lot of negative. I'd say there were some headwinds on NVIDIA, and like, there's the standard, like, is it overpriced? Is it not overpriced? And that debate, you're never going to yield anything with that. But if you're looking at like prior to this, right, concerns around maybe China and the US, hurting their sales. And if anything, there's been some looser regulations under the Trump administration on these chips, right? And now you have, a potentially expanding market. And this might be, we always say Jensen Huang is, always good at managing the story. And this might be them, kind of pushing their comfort zone to say like, hey, with this uncertainty, maybe we can capitalize on a new market. We should be able to do that. And yeah, it looks like some perception was changed around them, especially in the long-term options markets. And that's why we would never hold NVIDIA for that long. But yeah, my primary concern was headwinds as it related to tensions with China and actually, either tariffs becoming an issue for the chips going in there, or the U.S. potentially, pulling, making it even more restrictive to export chips to punish China. But we've actually, like I said, seen that pull back, right? tariffs are seeming like much less of a fear. Then if you have these like new upside components, I do think it really changes the story of Nvidia. And I might, if I see some more stabilization in the market, I might exit, or I'll see where TQQQ is in momentum score, and I might just take my profit on that and put it in Nvidia, because I do think this is a good story, and you can't ignore an upside move like that.
So Nvidia is kind of different from a lot of the tech stocks, and they haven't reported yet. I see they are set to report 5/28, so I think next Tuesday or Wednesday. Would you suggest, if you're not in Nvidia, maybe waiting for that report, or maybe buying now, holding up until maybe it melts up into it? How would you kind of think about that with them not having reported yet? One of the few.
I mean, with this kind of move, I would definitely be bullish on the report, especially if they're going to make this new product part of their forecast. Which, if they're announcing it, you could definitely see in about 2 years. I mean, I don't know how long it takes to bring the market, but companies forecast many years forward, and it's easy to see this become part of their revenue mix in about 2 years. So
Do you have
yeah, I
any?
mean, that could, like, the conclusion is that could really have them be guiding up, as opposed to some others that are warning now and guiding down, and that might be highly intentional. So yeah, we'll monitor it, but it, might not be a bad idea to own for earnings, especially now that this whole situation is cooling in China.
So it was a good time to post our short about how we no longer think chip stocks are radioactive, which went out today. But I'm wondering, since you're getting more bullish on chip stocks, it seems like the quantum stocks and those higher growth, future-esque companies kind of trade with the AI wave. And I've seen a lot of them, like D-Wave Quantum, IonQ, Rigetti, a lot of others make big moves recently. Any interest in those names that were very hot at the end of last year, or just staying with the chip sector for now?
Yeah, I mean, my girlfriend actually sent me a TikTok recently about, like, and asked if this was true. Basically, someone saying, like, you don't want to own Nvidia or whatever. Like, you're not going to get the huge gains off that. Instead, you want to own, some of these quantum stocks. And I agree and I disagree, right? I think that you're going to have much safer short-term returns if you own like an Nvidia, or some other stocks we like a Meta or an AppLovin. But like, you put, like, I think Qubit is another one. You put $100 in like a lot of the small quantum companies, and that's the kind of thing that you could see at 100x in the next 10 years, right? Those are like the big wins that people kind of dream of. The only caveat there is I'm not sure what paradigm we're in, right? Because there's a paradigm of, new entrants always come, make new technologies, grow like, incredible hypergrowth, right? But there's another paradigm where it's just like, okay, you have Google, you have, IBM, you have some other big companies that are really working on quantum computing. Are they going to be able to make a better quantum computer? Are they going to be able to kind of own that? I mean, you can never count Amazon. Like, I wouldn't be surprised if Amazon won that. So that's something that you always have that you have to keep in mind. Like, yeah, you could get the 100x return. But yeah, I mean, I could easily see a portfolio that has those small ones win big, and then that's the kind of thing, if you have the money to do it, yeah, maybe you put $100 into each of those stocks. But always the challenge for this type of thing, right, is like, what's the timing? And that was the problem with, like, that I had with Bitcoin, especially like, the last few years, where it's just like, yeah, I believe in it 10 years, but can I, in the short term, make more in other things and then put it into that? And I think that's the challenge. You could put $100, or that, $500 in a dividend ETF, and have it grow for a few years, and then maybe still get into those companies before they see their, like, hockey stick hyper growth. Granted, it might be too late. I'm just saying, like, that's kind of the difficulty of the debate when you look at stocks like this, where it's just like, yeah, there's huge potential, but when is the right cost benefit analysis to stick my money in there to get the potential? And the answer is it's probably never a bad idea to uh, if you believe that those are really going to be the big companies, to not and maybe you think one of them has a better chance, especially if you think you can odds make and think one of the smaller quantum computing, you have a sense that it's going to be better than the others, especially if you can do that. um, I would say go for it. Because yeah, those are the 100x, 1000x investments that really really change your life. It's just, the flip side, as we're talking about, is you never know if it's not going to be those companies, if it's going to be a company that doesn't exist yet, it's going to be existing, if it's going to be an incumbent. That's the tough side about that.
And I just want to mention again this quantum ETF. Its ticker is QTUM, because maybe like you're saying, it's very hard to pick the exact winner. But if you get this ETF that has like a broad variety and probably tracks that space better than any of us retail investors could. I see their top 10 holdings. They have D-Wave, Rigetti. They actually have Palantir, Alibaba. So maybe that's a way. Maybe you don't have 100 or 1,000x. Maybe you like cut it to 50 or 75x, but you don't have the zero potential probably too, right? So it's a little bit more safe.
Yeah. I think that's smart, but it's the same problem. I mean, I don't know how often. I mean, maybe you do count on that quantum ETF to add every new entrant. And I don't think. I think that's probably the best risk adjusted way to do it.
Mm-hmm. So I saw this crazy thing about Michael Burry. A lot of 13Fs came out last week, so I wish I could remember the Twitter account. I was scanning through them all. I'd give them a shout out, but they were posting like all of these popular Wall Street people. And Michael Burry's I saw, and I thought, wow, I have to highlight that because he is 100% all in on a single stock, and that stock is Estee Lauder, ticker EL. Just what a wild move for Michael Burry, who just seems like a mad scientist in the Wall Street and financial industry, like cooking up and just altering his portfolio in ways that no one would ever imagine. And how do you think this move will work out for him? And what are your thoughts on Michael Burry himself, his investment strategies and style?
Well, before I comment on Estee Lauder, I will say that if there's one thing I truly believe about the market, is if you do want to, whether you're a retail investor or you're Michael Burry, if you do want to make, big returns, you really have to figure out what you're doing that other people aren't doing. And I know he has like a very unique research process. It's a very kind of like, I'm not sure if you call it deep value, but it's a deep analysis on obviously this got shown in The Big Short. Like he's specifically looking for information conclusions that he thinks other people don't know about or have. And that is the right way to go about things. And like I'd also say on the converse, it's what a lot of retail investors do wrong, right? It's when people just pile into the same investments that everybody else is in. And the truth is a lot of the times retail investors are in much later than even some of the people that got in that early, and they might be on the top side of the growth curve. So those are the kinds of contrasts. In terms of Estee Lauder, I actually think it's funny. Upside went up about 20 points this morning, and downside went up from Friday, and downside went down about 8 points. So I think you could kind of call that the Burry factor. Like a lot of people are just starting to like pile in. That's a pretty significant move in Estee Lauder in upside. So yeah, I mean, I'm not that familiar with his returns, but I am familiar with like his posts. And I will say, like, I do think he overblows um the downside a lot of the time. He's always kind of doom and gloom, but the problem with some of these analyses is that, you never really know exactly when people are getting out of them. And I know he had a lot of puts, but he could have made a lot of money on those puts and then gotten out of them. But but yeah, I mean, if I had more time, I'd be very curious to like take a deep dive on Estee Lauder and try to figure out what he's thinking. But I mean, I do want to take a quick look at the chart and just see like,
It's an ugly chart, down 51% in the last year, 62% in the last 5 years.
yeah, well, yeah, I mean, his thesis, his thesis is probably that it got beaten down way too much, and that these, a lot of consumer goods, in this tariff kerfuffle got beat up pretty bad. Probably beyond their values, if it doesn't amount to anything. So yeah, I mean, I definitely see that.
We'll have to keep our eyes on Estee Lauder going forward and how Burry's doing. How long do you think he would stay in a stock like 100%? Like if Estee Lauder made a 20% move, do you think he'd start trimming, or is Michael Burry the type of guy where he's like, I expect this stock to move 100%, and until it does, I will keep like my entire position?
I think he'd probably start trimming at like that kind of gain because value moves like this, if it is indeed a value move, you really are only looking for a certain amount of recovery, right? I think the way you have to look at this is like the market can beat something up too much, but I don't think the market will really ever acknowledge that quickly that it was like Estee Lauder is down 50% in a year. I mean, I'd have a hard time thinking that it's going to recover all of that. And so, 20% in like a quarter in 6 months, that's a pretty good game. But like the other part of it, and this is like very hard, like, you know, when you dive deep on something like he did, maybe he thinks there's some kind of announcement or a debt restructuring that they're due for, or maybe he thinks that I don't, like I said, I don't know the business. Maybe he thinks they can like divest an unprofitable portion of their business and that they're going to do like that they're due to do that. Like that's the kind of thing that that only someone like Michael Burry could. There's very few people um who can just like see completely different things in the market. And I think, that's what some people would say. Like, I don't think he's operating on inside information, but I do think he's the kind of person that can look at a business, read there. By the way, I mention this sometimes. If you ever want to really know what a business thinks of itself, there's a section in the 10K called the Management's Discussion and Analysis, MD&A. And if you ever really want to learn about a company, reading the MD&A is the best thing you can do. But some people can read that, like Michael Burry, and say, "Oh, like they're setting up, they're setting up for a sale. They're setting up to send their, to sell off a division. They're setting up to, restructure their debt. Um, all those things are things that people that have gotten their 10,000 hours, gotten their enough repetitions, they can kind of see that in the numbers, and that's what makes people pretty unique.
And Topher was saying possibly a buyout, but I think it'd be pretty funny if like you have all these Wall Street people battling on which tech company is going to win and whatnot and AI, and then Michael Burry, if he outperforms them, investing in like women's perfume over the next 6 months, that would be pretty funny. Maybe a Big Short style movie part two. Um, but let's spin now to 23andMe because the company that's going to be buying their data was announced. So Regeneron is the company that will get the 23andMe DNA data for $256 million. Do you think this is meaningful for Regeneron? Do you think it will be allowed? I don't know the protections of the data with 23andMe. I think there was a little bit of questions there. And they had, I think, 15 million users. So $256 million is what they're paying for that. How do you feel about it?
I mean, sometimes you never get very far assuming things in life, but there's some things that are reasonably safe to assume, right? Like I don't imagine Regeneron is paying a bunch of money for that data if they didn't like look through the agreements when people signed up and what they were signing into and didn't think they had custody on that data, right? Nobody wants to spend money to acquire lawsuits, which is what they would be acquiring if they didn't have clean ownership of that data. But irrespective of that, there's kind of this like long tail component to data like that, because eventually we are going to get to a place where a lot of medicine can be done by genetics, right? You'll go in, you'll get your finger prick, and you don't even need to see a doctor. Maybe they'll look at some other things, and probably be a robot, and they'll just be like, here, okay, based on your genetics and your vitals, here are the pills that we prescribe you, or what have you. We're heading in that direction. And the road to getting that, right? We talk about machine learning a lot. You don't get to make those kind of inferences without a data set first, right? If you don't have a huge genetic database, you can't say, okay, based on these genetics and some of these, treatment factors that we might have seen or attempted, and the way like these genes express themselves, then nobody really knows how to take that information and then potentially create treatments or drugs to cure things around that genetic makeup. So yeah, this is definitely a path to that, but Regeneron stock isn't doing that well today. Like all of this stuff, what I'd argue, even when I'm talking about that, is what you really need is the genetic data as well as like a treatment path. And I don't know if 23andMe has that kind of thing. But maybe they just want, the mapping to have like a wider view of like what conditions come with certain genetics, to then have a stronger mapping to the treatment of those conditions, or the appearance of them. But yeah, I mean, I don't really. It could just be a customer database too, where they say that like, oh, this person has this genetic situation, so maybe we can market certain drugs to them. Now that I don't know the legalities of, but I also don't really know what the point of this acquisition is. So, that there might be some loopholes there. And it might be a situation where it's kind of like, when you move and then you get like cable things, right? I guess maybe there's some like, there's some, they could just be like, oh, like send all these people. It's like, have you considered these drugs, without necessarily having to tell them that they're sending them those like packets or advertisements or whatever based on that. And I mean, I do also think, we're kind of, I forget what, I think it was Minority Report, where you walk around and they like scan your eyes and it markets certain things. So maybe when we get to that point, nobody's going to really care that like Regeneron previously, or care or know that people previously had their genetic makeup, and Regeneron like at that point in time just plans to market drugs to those people.
So I feel like I want to highlight an interesting moral question about the data that I'm thinking about now. So Reddit is a $20 billion company today, basically because they're selling their user data to AI companies like Google and others, and that's how they're making a lot of their money. And that's what people think, oh, there's so much upside. They can sell their data to AI companies. But 23andMe was a company that went out of business, bankrupt, because they couldn't sell their user data. Imagine if they had been allowed to sell that data to other, pharmaceutical companies while they were, the holder of it. Do you think that's a concerning thing for companies like Reddit, or should they be worried that maybe in the future people will feel that it's immoral to sell the data like they are today? Or do you think there's differences that, that's why one can and one can't?
No, I mean, it's not about whether corporations deal in morality or not. They don't. Like they're not, like, public companies are not sitting around. I don't know how many conversations they have about morality. I will tell you a lot of the conversations that go on, which is them thinking if something will fly, right? If it's like, oh, if we put this in our like usage agreement, like, are people going to figure out it's there? Are they not going to use us? So, I mean, that's just the question. Like 23andMe could have put in their usage agreement, could have put in their terms and conditions that they had the right to sell your data anywhere, right? Why didn't they? Because people are worried that, I'm sure they were worried that people wouldn't use their service if it said in their terms and conditions that they could just give your data away to whoever. I mean, it's already hard to get people to send you DNA. Like, can you imagine if it said like I didn't want to do it just because I didn't like I don't care that much about where I'm from originally, that I want that I want some company that, could go out of business and sell it to have my DNA. But I'm sure that's in the Reddit terms and conditions that they can sell your data to whoever. And so, yeah, I mean, it's less a function of, can they get away with it? Because, you can sue Reddit until you're blue in the face. I'm sure when you sign up, it's right there in your terms and conditions that they can sell your data. And, you're pretty much just like throwing money away to a lawyer if you sign terms and conditions and it said they could sell your data. Which is like, that's like, it's kind of the difference between what we're used to, right? Like everybody's used to like signing up for social media and like probably like signing away like any right whatsoever because it's free, right? Um, People are not that used to in medical and DNA situations being like, sure, you can, just by virtue of giving this to you, um, you can send it to whoever. And I mean, I think the big thing that I'm touching on is it matters if you're paying someone, right? If you're paying someone, you have an expectation that they're not also going to monetize you beyond the money you give them. That's the transaction, right? If you're in a social media platform that you're getting for free, I think people do at this point kind of expect them to monetize you. And you're kind of dumb if you don't expect anything that's free to have some kind of aspect to monetize, right? Like Prospero, and we talked about this before, like our products are largely free because we want to earn trust and one day ask people for data that we use to make better predictions for them. So yes, there is always a reason, some of them more nefarious than others, but no one that is giving you a free product doesn't have some plan for the data.
Okay, well said. So I want to go to Build a Bear stock, George, because I saw a story today this morning about Bath and Body Works, I think, and it reminded me of how a few years ago, like a lot of it was weird. I don't know if investors were nostalgia during the pandemic, but a lot of like the 2000s companies that I feel like people maybe like my age and slightly older grew up with and had like a soft spot for, their stocks rallied for basically no reason. So I was looking at a lot of those companies, and a lot of them have faded all of those gains that they had, but Build-A-Bear stock has not. It's currently at an all-time high, and it's up 2,000% in the past 5 years. So anybody who invested in Build-A-Bear 5 years ago outperformed basically any investment you could have made. How surprising is that to you, the fact that that company has done that in the past couple of years?
Well, with the other stories, I'm just a little disappointed that 100% of Michael Burry's portfolio isn't in Build-A-Bear. I mean, that would be the story of the day. But I mean, I guess it was still pretty high ranking. Um, and the other thing I'm thinking is I'm just like, is Build-A-Bear, like, I wonder if they have like a patent on building the bears. Because I'm just like, that seems like, I think there's no more like consumer defensive good than like than a child that wants to build their own bear. Like, if that's what a kid has their heart set on, I don't think you could be like, well, can I just buy you this bear instead? It's kind of like it's kind of a really, I mean, it's kind of like a brilliant marketing scheme, especially when you consider like, all the growth there. But yeah, I wonder if there's some patent, like some utility patent on it or whatever, because like, I don't know, I haven't seen any like Build a Bear ripoffs. Um, but yeah, when you hear something like that, you've got to think that there might be some patent, and you got to think that there's something to the business with that kind of growth. But I mean, I don't know if they've expanded internationally like that. It seems like a much more American, maybe Western kind of thing. But yeah, and then I think the other thing, as I'm talking about this, that makes a lot of sense is like actually the fact that you have to like go to a store and like physically build the bear probably defends them from like Chinese knockoffs, right? Because you can't like you can't just like send a cheaper bear. It's not about the bear, it's about building the bear. So yeah, I wonder if like that would be like a funny thing to come out of all these tariff situations if there was like more businesses that sprouted up to compete with like Chinese goods, where you just like go in and actually like build the product.
It's about the experience. But George, have you ever built a bear?
I think it arrived way beyond my interest in building a bear, and I don't think that little George would have ever been that interested in building bears. Um, I like it's just it's too much work. Like I think I would occasionally go and like buy some toys, um, but I don't think I would want to like I was a pretty practical little kid, and I don't think I would have wanted to invest all that time in getting a bear that like and the labor that could have just been purchased.
Well, little Steven built a bear a long time ago, but I have no idea where that bear is today. But yeah, so
Ah,
we'll
see,
keep.
I mean,
I
maybe
guess I'll
they
have to
count
build
on
another
that.
one.
Maybe they count on you losing it, and you have to go and build more bears.
Exactly. So a story we didn't get to on our last stream on Wednesday, I want to bring up back today because now that we're covering the chips and the up on quantum and all of these like chip adjacent AI adjacent spaces, Oklo stock reacted very positively and is coming back up on a run now after they reported. But they made an announcement that their first commercial SMR, which is a small nuclear reactor, is expected to come online in late 2027 or early 2028. So, 2.5 years from now. About how do you feel about the nuclear stocks, Oklo? There was that story where Sam Altman left their board, so now there's Sam Altman less. So, has George built any Legos? That I
I
could see you
think I,
doing.
I think some, but I also I didn't nothing too extravagant. I didn't have much patience for that either. But yeah, I remember building a Lego ship, I think, or maybe it was just a ship. I don't think I think Legos required a little too much patience for me as well. But I definitely built a ship at some point. But I don't think I'm not sure it was a Lego ship. I do believe I put Lego men on that ship. But I don't know. That's a question for my mom. She watches sometimes. Maybe she's here
I
to
have to
comment
say it.
uh,
You know what?
on the ship versus Lego ship.
Did you ever do
Um,
Lincoln Logs? That was my childhood. Lincoln Logs all day.
I think I might have done those in school. Um, but back to nuclear power. Um, I think it's like I remember when I was hearing like the multiples that these nuclear companies were trading at, and I was like, that's crazy. Like it actually made like quantum and the upside of quantum seem cheap. Um, but I mean, we're going to need the one thing everybody says is we are going to need more power for the AI age. Now, is that going to be nuclear? Or are we going to figure something? Are we going to figure something else out? Who knows? But I do think that kind of similarly to the quantum, it's not a bad idea to speculate on, a nuclear ETF or a specific nuclear stock if you think so. I mean, honestly, to your point about Sam Altman, I liked Oklo better when I thought they would have some kind of inside track to get all of OpenAI's, Microsoft's business. But the flip side is, you know, maybe that's why Sam Altman like left, because you can't. It's not actually good for your stock if there's a sense that there's some kind of insider business going on. It's not good for anyone's stock. You can open yourself up to a lawsuit. But yeah, I mean, I kind of like where I stand is similar to quantum, where it's just like why I don't end up investing. Like I'll take them on runs, especially if I see like good momentum score. I've done that with IonQ a few times. I don't think I've had great success on that because those fast runners, high risers, they're more difficult to time than the things in my wheelhouse. But it kind of always just goes back to what I say about this, where it's just like I have a comfort zone of stocks that I think have a lot of growth potential and like more growth potential in the short term. And I just have a harder time getting excited about stocks that just have like a longer term growth potential. But yeah, I mean, I hope I can take my little my large caps, my meadows of the world for a ride and then still get in, for most of the growth. But like, yeah, the thing about how I do things is I don't really mind. I don't mind missing out on the 100x, 1000x things because to get that kind of return, you're also getting a lot of 0x's to get those big returns. So for me, I'm more, I think AppLovin when we first got it at like 5x from, we were in and out of it for a while. Like, that's what I'm looking more for. I'm looking for established companies that are just about to hit a next level of growth that I can take for 5x, 10x. That's my target, and that's a way safer target because you're looking at something like AppLovin, right? At the time that we first got into it, like I did think it had, big potential, especially where it was in the signals, and it had much smaller potential of a big drop, right? You look at any individual quantum stock, any individual nuclear stock, there's risk of that segment taking off and when it takes off. And then there's like individual stock risk of even if the segment takes off, that's not the particular stock that does. And in looking at AppLovin, the downside was way more limited and the upside was still very high.
So we're highlighting a lot of the more growthier areas of the market today. I'm wondering, like, if those areas can work, does that mean the Russell and the small cap index you think can work? Because it's still been lagging, and I feel like that's been forever as long as we've been streaming. It's always been lagging the other indexes. But any interest in small caps, Russell?
Nah. Like I just don't think like I think I mean, and the way that I look at it is like this year on like Trump bad news for the market, right? Small caps got hit even harder than large caps, right? So it's just like, well, I'd rather take the more limited risk of large caps, and in my view, similar upside than kind of the small caps. My mom is watching. I've got some news. So I didn't share this part, but my older sister would often break the things that I built. So I think I was discouraged from building things. I did remember correctly. There was a Lego pirate ship built. Also, apparently, Estee Lauder's family came from my mother's home village, I guess in Poland. Um, and my niece and my mom did build a bear together. Not my nephew. But yeah, there Merle Kalis weighing in on the on the live streams
Well,
comings
we
and
connected
goings.
a lot with the history of your family today. I'm sure it was probably an enjoyable stream for Mrs. Kalis to watch. But
Yeah,
that's
yeah.
funny. Um, we have one more topic here today. We have had close to 2,000 people join in, so thank you all who've been tuning in throughout the stream. If you enjoyed the topic so far, please hit that like button. If you're watching on Twitter or YouTube, we really appreciate it. But I want to get into now the final discussion we'll have here today before the model portfolio. President Donald Trump making comments about Walmart and China, saying he expects them to eat whatever increased costs tariffs have on their businesses. Quote, Walmart should stop trying to blame tariffs as a reason for raising prices throughout the chain. Between Walmart and China, they should, as I said, eat the tariffs. That doesn't seem the way that businesses usually operate. So is that concerning for Walmart, the fact that he's putting pressure on them? And that I think with the retail space, their margins are probably thin as it is. How do you feel about them?
Like Walmart is a very very small margin business. Like if they did eat the tariffs, like that might send them into a loss, right? These are just like, pricing and supply chain management is everything. So I don't even know what that comment is. Like I saw it listed as like a not so veiled threat to them, but I mean, it doesn't matter. It's just talk, right? At the end of the day, like Walmart is more afraid of their shareholders than Donald Trump, right? And it's just like, and that's just because they're so big, right? I like it, like maybe the CEO of Walmart is a little scared of Donald Trump, but he's not the only decision maker. He has a board. And even if he's like, look, like I don't want to get into trouble, like I don't want to get into trouble here, his board's probably like, tough shit. We pay you to make the tough calls, and like you're not lowering prices. Like it's just not on the table. Like even if like some of the senior management wanted it, because at the end of the day, you're responsible. You're responsible. I don't think we're at a time where any CEOs can go to jail just based on or get in trouble just based on pissing off someone in power. Not in this country, not right now. But in this country right now, you certainly can go to jail for not upholding your fiduciary duty to protect the corporate profits of your entity. So it really is as simple as that. Like, like there could be a day when this isn't true. But for a public company, the scariest thing is facing your board as a CEO, facing your board, facing your shareholders, not quite facing any political leaders.
That was an interesting way of putting it. Fear of your shareholders. Do you think that's how a lot of like management teams and CEOs and corporate feel, or is that just like in the moment you said that? But like I think that's a very interesting wording. I've never heard it said like that before.
Yeah, I mean, look at what happened. Like, look at the chain of events of like Tesla considering like right before Elon Musk left Doge, the story of Elon Musk, them examining alternatives, right? What is that other than fear of the shareholders, right? Like, obviously, and that's actually a really good example, right? Because the board was probably also afraid of opening that search and what Musk might do or feel or say about it, right? So that's actually evidence that they feared the shareholders more than they feared, Musk or any like, government consequences. So I think that's actually like a really like clear example that, whether you're the board or the CEO or whoever, like there's nothing scarier than, shareholders. There was two components to that situation, or really any situation, right? It's your loyal shareholders that are starting to like make whispers about starting to make whispers about uh maybe selling or getting tired of like of things that are going on. And then you also have like, the shareholders that left and the public pressure around just like scuttlebutt and the news and everything about like that you might not be managing your company as well as you could have. Because I don't know, like I'm actually not as familiar with like boards and if like a board could get sued for not say replacing a CEO in a timely fashion, or it's all about worrying about like the stock price and public perception. Um but I imagine in certain situations the board at least could take some heat. You might be, you certainly you're in jeopardy of getting fired and as a board member, and then maybe you don't get your other board positions are very cushy on public companies. Like you get a lot of money and stock to work like a few times a year. So I think even just like the threat of losing your position is not what you want. But that's another example of being more afraid of the shareholders, because I'm sure initiating a search to replace Elon Musk, you're in much bigger jeopardy of losing your position in that scenario than you are from like the scenario of the public of the shareholders not being happy.
Well, that's going to do it. We are at a wrap for the topics. I think we had a great stream today. If you did as well, one more last reminder to hit that like button. But we'll do the switch over now, start the model portfolio update on the other side, and catch in with George in the Prospero AI laboratory. Let me just say a public service announcement for all of you guys tuning in and that watch our streams on a bi weekly basis. If you enjoy them, what would be really helpful if you watch on YouTube is to leave a comment on the video right after the live ends. It's really impactful for the YouTube algorithm to see comments, and I appreciate everybody who's in the live chat, but I don't think YouTube treats it the same as a comment on a video. So if you appreciate it, just a quick, love the stream or great job, guys, or whatever, I would be very thankful if you guys could do that. So just let me put that out there. We'll check back in with the net option sentiment in Prospero. At the beginning of the stream, we had the SPY as low as 12, and then we looked again, it was at 22. The QQQ was just holding on above the bullish level of 40. I think it was at like 43. So we'll look back now. Mario, it's a great discussion today. Thank you, Mario. I appreciate it. All right, so I have the SPY pulled up. The SPY is currently at 17 for net option sentiment in Prospero, and the QQQ is at 48. So we're still seeing that wide gap between how it looks like tech investors are viewing bullish and other areas of the market a little bit more bearish. Let's see. Every major index is now in the red. When we started the stream, the Dow was slightly green. It's very, very slightly red. Russell still the laggard on the day, although it's now down just 0.86%. So when we started, it was down 1%. Looks like everything is still slowly drifting higher. So we'll see if that trend can continue throughout the day. We got 4 hours left of trading in the markets. So can the markets finish in the green? We'll have to keep our eyes peeled. Going to be interesting to see what George does today in the model portfolio with the net option sentiment so split for SPY and QQQ. It's going to be an interesting adds and drops today. The VIX actually opened up today, almost crossed the 20 mark. Now it's back down to 18, so looking good. The volatility is lowering. Topher said, great stream. I appreciate it, Topher. Thank you. Let's take a look at the Mag 7, Bitcoin, see if anything has changed for those assets while we have been live. I think every Mag 7 stock except for Microsoft was red just an hour ago. And it's still looking that way right now. Although Meta has been green. Now Amazon has been green today, but all of them are currently red except for Microsoft. Let's see if NVIDIA has changed at all. NVIDIA is still red, but very, very slightly. So things are coming back. Let's look at Bitcoin. Bitcoin is up just over 1% today, approaching $105,000 overall. I don't know what Bitcoin's all-time high is, but I think it must have gotten close to it last night. It peaked at 106.5. So I think it got, if that's not it, it got very, very close last night. So we'll have to be on Bitcoin watch to see if it can make a new all-time high this week. Okay, let's look at the short-term bull list in Prospero, which every morning, if you guys follow us on Twitter, I highlight one of the stocks that's on our short-term bull list. And then in the afternoons, I've been updating on Twitter as well for SPY and QQQ levels near the end of the trading day. So 109. Okay, so what is that? Just a percent or few away from the all-time high. So 110 will officially be the all-time high. So that's the number we got to watch out for. But I see George is actually tuning back in here. So we'll do the model portfolio update starting in just a moment. And it looks like we're going to cross 2,000 viewers today on the stream between YouTube and Twitter. So that's awesome. All right, right now in the short-term bull list, I see Eli Lilly, Google, NVIDIA, Alibaba, Dell, Microsoft, Coke, Broadcom, Energy Transfer, and Deckers. Deckers has been popping up a lot on it. It's an interesting one.
I wonder what's going on there. What do they even like? I
think
what do they even do?
Uggs. Let me look, but I'm pretty sure they're like Uggs.
Oh, I thought they were like outdoor furniture. All right, tell me.
They're the UGG brand, Hoka. Yeah, a lot of like apparel.
Oh, interesting. Tell me QQQ SPY.
All right, so SPY is at 18 right now, and QQQ is at 49.
Damn.
Such a wide range. We are witnessing a growing distance between QQQ and SPY. Historically, this means that the market is about to make a big move. Which way will it go? Topher said maybe athleisure wear expansion going after Lulu. Typically in these situations, we do not like to pick a direction, so we'll account for both. We'll protect the potential upside in tech and general market downside. We didn't cover it on today's stream, but UNH has been making wild swings, George. Have you been following it at all since we talked about it last time?
What?
UNH stock?
Yeah, we added it in the trading portfolio like at the end of last week.
Wow. You're happy then.
Yeah.
Looks like we can be more targeted on the general market and target small caps on the bear side. We targeted energy bears to end last week, so I feel good about that. Also, our move to healthcare bulls looks like the correct one. Targeting consumer discretionary bears and some more large cap tech bears to balance our exposure.
Oops. Put it in the wrong place and confused myself. Are Disney and CEG wins?
Disney lost, CEG win.
How many do we have here? 40. That is a lot of these we have to get rid of. I guess we did add. We are going to exit that in the end. Okay.
Comment from Spiky Dude. Just want to say I really appreciate seeing you guys live here and especially appreciate y'all's honest takes on the market and assets.
Thank you.
Spiky Dude.
Let's see what we got going. I don't think there's a lot of room to add longs. But we'll see if anything in particular looks good. Yeah, we definitely were able to get in front of this wolf situation. We had two in our portfolio, and then we added a few more this morning. Actually, because we have so many in there, we're just not going to include it. But I think 13 is one of the lowest momentum scores I've ever seen. So our live people will get a benefit. We have 4 wolf positions in our portfolio. Okay, we want 1. I do also want just a large cap tech that we'll look up. What do we got here? Oh wow, Taiwan 70. Looks good. What's PCTY? All right, now we can do the rest. Actually, let's see what we have. All right, probably good to get a little more of this. It's running. Okay, and then let's see.
Sure, 7 minutes. And we're starting now.
1, 2, 3, 4, 5, 6. And then we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, I feel good about that. I'll do that too. All right. All right, I think we want to send this out for. Yeah, right. All right, that's done. Yeah, it might be time to get rid of TQQQ for NVIDIA. Those are all right. Are either of those wins? No. Hold out. Yeah, I think that's all I'm going to do unless. I'll check a few of these bad momentum scores and. Maybe I should add UNH. Yeah. I'm in. That looks pretty good. Oh, that looks very good. Yeah, okay. That's what I'm doing. So we are. I just need SPY. All right. Okay, that's all. We are all done. That's a wrap.
What a stream. Thank you, everybody, for tuning in today. I hope you enjoyed, and we will be back live Wednesday at 3 p.m. So see everybody then. Bye, George. Thank you.